Hi, everybody. My name is Alex Offerdahl. I grew up on a small farm just north of Conrad, and I now work with a consulting company called Wattson Associates. We're a specialty economics and agriculture consulting company, and we work extensively with development of farm policy and with creation of new crop insurance products. Today, I'm excited to talk to you about a brand new option that's available to Montana producers that I think could make a real difference. Enhanced coverage option is designed specifically to solve a problem that a lot of us are having right now, and that is that input costs have stayed stubbornly high, even as our prices have fallen off. That's creating a real margin pinch, and frankly, the traditional forms of crop insurance that we've been buying, most of us, 75% RP policies, just don't offer enough coverage to guarantee us a decent shot at covering our input costs. So today I want to talk about a new tool that I think could be useful for you in trying to address this particular situation. So let's talk a little bit about ECO. First, this is a product that was made in Montana. This was developed by, for, and from Montana producers. And while it's available nationwide and now covers 61 crops, one of the areas that we always had in our mind's eye for making ECO available was for Montana farmers who faced these margin squeeze problems all the time. I was disappointed, the product's been available since 2021, that one of the lowest participation states is right here in my home in Montana. So let's talk a little bit about how the product works and whether or not it might be a good fit for you. Please note that I don't sell this product. There's no commission to be earned here. And frankly, this is a choice that you need to be making yourself with the people that are involved in the financial decisions for your business, and of course, with your crop insurance agent. If you take nothing else away, this is a question worth asking your crop insurance agent and digging deeper to see if this might be a good fit for you. So please take this to your agent and see what impressions he or she might have for you. So let's start with a spoiler alert. The reason that I thought it was so urgent that I talked to you this fall is because the Federal Crop Insurance Corporation's Board of Directors has gone out of their way to make ECO more affordable. It now has a 65% subsidy rate. That's the same subsidy rate that's available for the supplemental coverage option a lot of us have been taking for the last couple of years. And it also is a meaningful increase from where we've been historically. That means that taxpayers have done all they can to make this product as affordable for you as possible. So let's dig in a little bit on some of the high points of how it works and what it is. ECO is an endorsement to individual coverage. So you'll buy it not instead of the individual plans you've been buying for years, but rather in addition to. All of the coverage that you've had before will remain in place, but this will add a layer of individual area-based coverage that sits on top. Now, that's a complicated thing to say, so let's dig into that a little bit. The coverage that's offered is area-based, and for most of Montana, that means county. That means that we'll be looking at the expected yield for the county and then comparing that to the actual average yield that is harvested in the county overall. That is not the same as coverage for your own farm. But the amount of liability that's established is based on your historical yields and the prices this year. So this is area-based coverage, and nothing that happens on your specific farm will trigger an indemnity. But your historic revenues help set a benchmark for the value, the liability that's insured here. It's important to understand that one of the first things we imagine in the big counties like we have in Montana is that an area plan couldn't possibly be useful for us. Clearly, the county is much different than my farm, and I could have a loss on my farm that wouldn't be recognized by this area-based plan. That is a possibility, but statistically, we've looked very closely at each of the individual farms across the state and then also at the county. And for most farms in most years, as you'd expect, they track pretty closely with the county. A drought that hits your farm hits the county as well. Individual hailstorms are an important exception and won't move the needle much on a countywide number, but they can have an important implication for your farm. So please note that ECO is not intended to replace your existing policy, but add to it. And we'll talk about why that's both good economics and good risk management as we go a little bit further in the presentation. The other thing you need to know about ECO is that it takes a long time for indemnities to come through. Because it's an area-based plan and they have to wait for all of the values to be reported for every producer in the county, aggregate them up, and then calculate an average for the year, we can't calculate indemnities until May of the following year. That means the crop that you will plant this September and that you'll harvest next summer won't be indemnified on this band of coverage until the following May. Please note this has no impact at all on your individual coverage. That will continue to operate as it always has. If you have an individual loss, that will be settled around the time of harvest, as it always has been. So let's talk a little bit about how this program works. First things first, and the reason it was so important to me that I talk to you right now is that you're running out of time to make this election. The sales closing date, the last day you can buy crop insurance for your wheat, is on September 30th. So in the next couple of weeks, it's going to be important that you talk to your agent about this choice and see if it makes sense for you. You can buy ECO in addition to the supplemental coverage option. That's a choice that a lot of us have been making over the last couple of years. But there are some major differences here between this and SCO. First, SCO tops out coverage at 86%. ECO is designed to offer additional coverage on top of that at 90 or 95%. The implication here is small deductibles. So as we find ourselves in situations where prices have fallen fairly rapidly, frankly, over the last year, and at the same time, a lot of our input costs have stayed stubbornly high, this is a product that's designed to allow us to buy enough coverage to hopefully guarantee ourselves a situation where we can meet our input costs, at least on a county basis. This triggers based on RMA, that's the Risk Management Agency of USDA's expected county yields to establish coverage, and then the final harvested yield that will be available the following May when those information become available. And for the most part across the state, as we've dug in deep, Montana County expected and final yields match pretty darn well with what producers are actually experiencing. Just like the RP program that you're used to, it uses the same price discovery. In fact, the projected price and discovery, I am recording this on September 11th, is just about wrapped up for this fall. We have a pretty good sense of where that projected price is going to be. The same price that applies to your RP is going to apply to your ECO as well. Finally, your coverage needs to be within the same company. This is an endorsement to your underlying policy. So, for example, if you have an underlying policy with NAU and you want to buy this enhanced coverage option, that would probably apply to your NAU policy as well. You can change your policy company at any time you like up to that sales closing date. But by September 30th, you will be locked in to that policy and that company. Please note that enhanced coverage option is available from all of the crop insurance companies that service Montana, and adding enhanced coverage option is not a reason why you'd want to change your insurance company. So let's talk a little bit about where that ECO band of coverage fits in. So let's start with this bottom part, and this is the coverage that's most classic for all of us. In Montana, the most popular coverage level has been revenue protection at 75%. Over the last couple of years, a lot of us have chosen to take advantage of the supplemental coverage option. That's allowed us to buy a band of area coverage up to 86%. However, and we're going to talk about this more in just a minute, if you take the supplemental coverage option, it changes the options that are available to you from an ARC or PLC perspective from the Farm Service Agency. That is not the case for the enhanced coverage option. The enhanced coverage option operates fully independently of those programs. So you could buy that 95 or 90 to 86% coverage on ECO, whether or not you choose to take advantage of SCO, leaving your options open for ARC or PLC when you work with the Farm Service Agency. And I know that sounds like a lot of letter soup, but the bottom line implication is that what you do with ECO has no implications on what you have to do with the farm programs, unlike some of the other crop insurance options that are available to you. I also want to draw your attention to this deductible, a 5% deductible. That means that you would only have to lose 1/20th of the value of your crop before crop insurance comes in and starts to protect you. That's a lot different from where we've been with 75% individual coverage, where you've got to lose a quarter of your crop before crop insurance starts to add any value at all. That means that this policy is going to trigger indemnities a lot more often, and particularly where 75% of your expected revenue might not be enough to cover your costs, having the ability to buy more coverage increases the probability that you're going to find a policy that actually meets your cost expectations. So as I noted, there is no interaction whatsoever between Farm Service Agency programs like ARC or PLC for the enhanced coverage option. That is not true of the supplemental coverage option. If you take supplemental coverage option on a farm, you become ineligible for ARC, and that's true of both ARC County and ARC Individual. At this point, I've got to tell you, I don't have a crystal ball, but it looks unlikely that there's going to be a new farm bill put into place ahead of the 2025 crop year. The expectations are that there'll likely be an extension, perhaps something that could get done in the lame duck session after the election. If there's an extension, it could be that the ARC program will become a pretty important component of our overall risk management strategy. If that happens, having our options open, perhaps not taking advantage of SCO, but looking at ECO instead, could be a good play for a lot of Montana producers. It's something you should definitely talk to your crop insurance agent about. So let's go through some quick math, and I'll show you specifically how this program operates. There's no mysteries here, it's just math. So let's start with some calculations. I've got an example here for Choteau County, and I chose a projected price of $594. Price discovery for this fall is not complete yet, so I know that this number ultimately at the end of the day for 2025 is likely to be a little bit different than this, but we should be in the right ballpark here. So I put a $594 projected price in place, and I have an approved yield for my farm of 50 bushels. That's the long approved yield history relevant to my particular operation. So we take the greater of the projected or harvest price, like we would for any revenue policy, and our approved yield, and that gives us a sense of the expected crop value. From there, we take our ECO coverage level, upper band. Here I've chosen a 95% plan, and we subtract from that 86%. That is the lower end. So we've got 9 points of coverage. That is the width of our band of coverage. We then apply that to our expected revenue, and as I noted, based on our own farm's approved yield, and that gives us an amount of liability. This is the protection that's available to us of about $26.73. That's about $27 more coverage available to us than we could get under our individual RP policy. So now what happens if we have a loss? Well, let's say that we first calculate our guarantee, and then we calculate what happens when bad things happen. So let's start with our ECO expected area yield. For 2025, the USDA says that's 48.3 bushels per acre. We then multiply it by our price, $594, to get an expected area revenue. At the end of the year, we calculate our revenue to count. Here we've got an actual revenue of 43. Just for the sake of example, I don't know what the yield is going to be for 2025, but it gives us a place to work an example, and a harvest price of 580. We multiply that yield by price to get a final revenue. We then compare that revenue to the expected, and we see that in this scenario, a very shallow yield loss and a very slight price decline, we're getting 86.9% of the expected revenue. We subtract that from our coverage level to see that we've got an 8.7% loss, and then we compare that to the width of our band of coverage. From 95 to 86 is 9 points, so that we see we're going to be paid about 90% of our guaranteed liability. So we take that 2673 of additional coverage, and we multiply that by the fraction of our payment, and producers are going to receive an indemnity in this scenario, a scenario where we harvested about 5 bushels less than we might have expected, and the prices fell very slightly. Producers are going to receive an indemnity of $23.97. That is difference-making money for producers in a scenario where you wouldn't have gotten a penny from your SCO policy, and you wouldn't have gotten a penny from your RP policy. The losses just wouldn't have been deep enough to trigger an indemnity. And it's those perpetual shallow losses that have been so hard on equity for Montana farms for the last several years. So does this work in the real world? Well, this is a chart of the actual indemnities paid on a per acre basis for the 2022 crop year for winter wheat non-irrigated. As you can see, some of the counties where a lot of wheat is grown in Montana, this has been a huge difference maker. Now, the liabilities were bigger in those years because the prices were higher, but this is certainly a situation where ECO made a positive difference for producers in 2022. The 23 numbers also tell a compelling story, and in the areas where there were yield issues, we also had very large per acre payments made under the enhanced coverage option product. So for those reasons, I think that it could be a fit for you, and it does actually work in the real world. It's not going to trigger in every county every year, but it is going to provide additional assurance now as we're incurring these input costs. And if at the end of the day we do see prices continue to fall, or if we have a poor production year like we had in 22, or to a lesser extent in 23, it can make a big difference. You'll note I don't have 24 numbers here, and the reason for that isn't that most of the harvest isn't complete, but that those final numbers won't be released until May of 2025. Again, it's a long time before your ECO payments come through, and that's something I'd encourage you to talk to your lender about as well as your crop insurance agent. So, as is always the case, it's a pleasure to talk to you about any of this stuff. But if you have additional questions, please reach out to the leadership of the Montana Grain Growers Association or to your own independent crop insurance agent. Talk through with them your situation. And if you can find additional information or if you have additional questions, please don't hesitate to reach out. Thanks, everybody. Have a good fall.